So, hello guys and girls. My name is Arseniy. I'm 16 years old, and my experience in trading about 3 years. And today I want to talk with beginners and just say some words to beginners that they understand how they can work in market and why something can go wrong. So yeah, I wanted to talk with you about risk, money management, about minuses, about pluses, about statistic, and yeah, a lot of more. So we can start with statistic because it is very important and beginners. Yeah, uh, you must know about all your trades, all information. If you make like bad trades, you must analyze why. So you just mm, think why here is like bad trade. You analyze that maybe formation isn't work or uh, you just don't put like stop loss and that you have got very big stop loss after that or liquidation or you just put very big leverage to the position and more and more. So and after that uh, you write to the paper this all uh, and just analyze how many positions like with this problem, and you just must review this problem. So after that you must understand that uh, when you have got like plus from position and your position is done very well, you have got nice profit from this position. You must analyze it too. Just why I close this position here, or why my position is working here, and why I'm just close it in plus. And this is very important for traders and for beginners too. Yeah. About risk management. A few words about risk management. So you must understand that uh, we all here working with leverages, and your risk mustn't be very high. If you're trading in like futures, uh, that means like you can use 100 leverage and it's very big for trading. Uh, we use only 5 leverage, maybe sometimes first leverage, sometimes uh, second leverage. And I want just to tell you that don't use very big leverages. Maximum for you beginners, if you don't know your statistic, it's like 5 leverage. It's maximum. Uh, about money management, you must understand that we're working with stop losses. If your stop loss is like 1%, it means like that your profit must be 3 times bigger than your stop loss. and it's working like this. So you have got 1% of stop loss, and your take profit must be 3 percentages. And after first take profit, you can just put your stop loss to the point when you open your position. After second take profit, you can just put stop loss to the first take profit, and this position will be very good close. So yeah, it's about risk management and money management. So I want to talk with you about very good pattern and how it works. So a lot of traders are very different. Many traders don't want put very big leverages to the position and make just very big profit, yeah, in 1 second. But many traders are want to fast money take and go away from market. So we haven't got the best formation. It is very important to understand, but I will show you like my favorite formation. Uh, it is called like oblique. It means like we have got trend line, we have got price. Here's first, second, third, and fourth. So we must have here three rebounds. It is very important that three. After this, when price go to this oblique in the fourth time, here must be like small base, and after this very big chance that we just make like this movement to the second take profit. After this correction to the first take profit and last take profit. In the impulse market, it works done very cool, and your point when you open position, if we have got base, must be here. Like when we break up this base, here is small level, yeah. Your first take profit will be here, second take profit will be here, and last take profit will be here. And very important that here will be your stop loss. It is logical stop loss, and when price make like break up and after this start grow, here must be your stop loss. Because here is very big chance that movement will be like this, and it is not very cool for us because here we put like our short position. So and if your first take profit here, second and third here, yeah, your average take profit will be about here, maybe sometimes here, but yeah, if you look here, here will be one part from point when you open position to your stop loss, one part, and here like these parts will be much bigger than 2 and then 3. So and we're searching like these positions, It is like my favorite position. Your favorite position, possible that will be a like broken level. It is like second formation when we have got level one, two, and three. Yeah, here we have got level. Mm, Price. Make here first rebound, second rebound, and third, it makes like small base. Base means like when we have got like first, second, third, uh, fourth candlesticks, and it's like about in one price. It means like base. When we making here small base, we put here position to long, put here our stop loss, and we just wait like this impulse. Here will be our stop loss part, it's one part, yeah, and our take profit must be like this, from our level to this low, and here is 0.59%, so 0.59 to our take profit. It is example, and you must understand that in real life here like will be 3% or 2% or maybe 1%. Maybe sometimes it will be 10 percentages, and it's okay. So you must just understand that it's examples. And I think that's it. Yeah. And this all what I want to talk about today. So it was Arseniy. If this video was very cool and you like it, just put like and subscribe to my channel. So goodbye, see you next time.